Something strange is happening in the silver market, and most people aren't even looking in the right place. Just days ago, silver was flying above $110 an ounce. Confidence was high, emotions were higher, and then reality hit. In a matter of hours, silver collapsed hard, bounced, and then dropped again. That kind of move doesn't just shake prices, it completely rewires behavior. Here's the interesting part. A few weeks ago, coin shops were drowning in silver. Wholesalers didn't want it, refiners delayed payouts, and sellers were everywhere. Fast forward to now, and the script is flipped. Coin shops are selling faster than they can restock. Dealers are running out, dip buyers are back in full force, but not all silver is being treated equally. While people are aggressively buying rounds, eagles, and maples, there's one type of silver that's being quietly ignored. You can buy it right now for well below spot, literally cheaper than the market price, and that irrationally 90% silver, constitutional silver, or as some still call it, junk silver, even though there's nothing junk about the metal. Well, what's wild is this wasn't the case just a few years ago. Back in 2023, 90% silver carried massive premiums, sometimes higher than silver eagles. People were paying insane prices when silver itself was under $30. Today, total opposite. Demand collapsed, premiums evaporated, and most buyers walk right past it. I saw this firsthand. At coin shows, everyone asked for shiny 1-ounce coins. Only one guy cared about 90%, and he wasn't stacking, he was arbitraging. And that's where things get interesting. Right now, some dealers are selling 90% silver several dollars per ounce below spot, while simultaneously paying far less if you sell it back. The spread is massive, bigger than rounds, bigger than eagles. Which means yes, you get more silver for your money on the buy. But you give a lot back on the sell. That's the trade-off most people miss. For short-term holders, 90% silver makes very little sense. The spread alone means silver has to move a lot just for you to break even. But for long-term holders, think decades, not months, there may be a strategic angle, especially when premium gaps get this extreme. The real takeaway isn't buy this or avoid that. It's understanding why the market behaves this way. Volatility changes preferences. Fear drives people toward what feels familiar. And ignored assets often stay ignored, right until they don't. Silver hasn't changed. Human behavior has. So now I want to hear from you. Are you stacking what's popular or what's cheap? Drop your thoughts below, hit the like button if this helped, and remember, stacking isn't about excitement. It's about patience. Stack long, stack smart. And I'll see you next time.